What's up, you guys? All right, well, here we are. It is the 26th consecutive green day, and it's kind of crazy, but I'm up $11,000, $11,900. I might as well round it up to $12,000. And the stock that I traded that I made the most on was IO. Now, IO was straight off the gap scanner this morning. So, every morning I run my my watch list on YouTube and Facebook, and IO was the leading gapper, and as soon as the bell rang, I jumped in, 347, 348, 350, and boom, it goes 360, 370, 380, 390, 395, a little pullback. Bought the pullback, then it squeezes up over 410, 420, just awesome momentum. Now, it did end up having a little bit of a bigger drop off of, what was the high, around 440 or so, 450. It couldn't break over the high of that level, flushed back down to 4, back down to 375, popped up for a second before going lower. So it didn't hold up super well, but then I switched gears to TTPH, which was also on the scans, and I had one other that I traded. So overall, a green day, and I made the bulk of it on IO, focusing just really on that one stock right out of the gate. So that's been working really well for me, really now for the last 4 days, just finding that one and just really staring at the level 2 and trying to capture as much as I can on it. Even if I am scraping a little off the bottom with dip trades, it adds a little profit, and I don't feel like I missed any good opportunities on it. So great job for those of you guys that made some money on it. Leave some comments below of how you did. It was straight off the watch list, so I mean, it was a really pretty clean setup. Even with subpar platforms, you should have been able to do okay. And I would say that right now we're in a market where things are pretty hot. I mean, this is one of the best hot streaks I've had, knock on wood. Like, that's metal, but whatever, it's, now I guess this is a problem with anything that's performance related. You get a little superstitious. So, all right, knock on wood. I was actually, this is my garage here next to where my office is. So my office is in that building over there, and then this is the garage where I have some of these older cars that I'm working on, and they're in sort of various states of being projects. But I have my desk, or my chair over here, and I was, some of you guys have been probably noticing I've been sitting in like a really uncomfortable chair for the last 6 weeks since I started working from my house. I come down here every now and then when I've got things to do, but I work from home. So I was like, oh, maybe I should just grab my chair, be more comfortable. But then I can't help but feel like a little superstitious, like maybe like having an uncomfortable chair is somehow like pivotal in my success right now, because this is the best hot streak that I've had in like forever. So this is usually where I'd be trading, and this is my chair. I don't know. I honestly just can't risk it. I can't risk it right now. So I'm just it's not a big deal. I'll just keep sitting in the middle chair, like whatever. Because if I have a red day tomorrow, it's that chair's fault, and I can't handle that. So anyways, that's where I'm at right now. These are, first world problems. Should I, I've made $127,000 or whatever it is in the last 27 days, and now I'm afraid to change anything because what I'm doing is working, so I really shouldn't change a thing. All right, you guys, so if you're not already in the chat room, if you're not already watching the live watch list every single morning, make sure you subscribe to the channel. Check out some of the links in my description to learn more about my strategy, and as always, ask questions if you have them. All right, that's it for me. I'll see you guys first thing tomorrow morning, Friday, Wildcard Friday, and hopefully we have something really nice on the gap scanner. All right, see you guys later. Bye, everyone. What's up, everyone? All right, what a day. My head is spinning. Today was wild. It was really clean on IO. IO today, 26 consecutive green day, up total $11,921.83. And IO was the big winner today, and that was straight off the watch list straight off the gap scanner. So again, fourth day in a row, or maybe even more, where the biggest winner has been right off the watch list, which is always nice because it tells me that pre-market I was looking at the right stuff, and that was definitely the case here. So let's see. What's my login? I'm just there we go. I'm just logging into TraderView. So I have my reports. Again, these are updated. This is the last 30 days. So I had 2 red days, and after those 2 red days, I was like, all right, enough's enough. I got to tighten things up. And that's when I started to turn things around, and that's what has led into this most recent green streak. So on the month so far, we can go detailed. Actually, no, let's go to overview and then the calendar. So April, no red April. Awesome. May, so far, no red May. And so far for the month of May, let's see. I am going to be sitting up after today, $36,000, $37,000. Not bad considering we're only 5 days in. I mean, this is a fantastic start to the month. Accuracy still at 80%. I don't know what it'll be after today. I had a couple of losses. Biggest loss was $1,500. Well, today I had a $2,500 loss. I did have a bigger loss today. So let's talk a little bit about today, where things went right and where things went wrong. Again, today for Warrior Pro students, I have our live trading archives. Let's see, which will get uploaded. So let me just grab this so I can show you real quick. So live trading archives here. So this will get uploaded, and during this you'll see this was my one bigger loss on Pixie on a dip trade, but I also had one really nice trade on IO, which was right in this area. So I'll just show you this one because this was really sweet. So IO, I bought this dip off of VWAP. I'm in at 89. And then it comes back up to 4. I add to 8,000 shares. I add again 12,000 shares. I'm in this with 12,000 shares right here at $4, and watch what's going to happen. Here's 420, looking for the break of 425. The high a day was 425. So I was looking for this to break through 425. Right now I'm just like, hey man, I'm in the driver's seat, I'm holding. Boom, I added 1,000, up to 13,000 shares selling, and just like that, locking up profit on a sweet trade. So on this one here, let's see how much I'm up on the breakthrough 25. So I went up to, let's see, right, coming back up to 25 right here, volume coming in, I add 27, 31, 32, $3,700. I'm taking a little profit off the table. So that was my biggest single winner, which I don't know actually what it'll do for my biggest single winner on the month, my TraderView stats, because it shows my biggest gains at 4,500, but it was a really nice trade. So IO, let's just go back to the watch list, kind of beginning of the morning. How did I find it? How did I know where to get in and out? This is our leading gapper in the entire US market. It was gapping up 100%. That's a big gap. All right, so it's gapping up 100%. It's got a float of about 12 million shares. It currently today has 40 million shares of volume. Right now, 40 million shares. It's very thickly traded, easy to get in and out with big size. And again, for those of you guys that are like, Ross, I can't buy 13,000 shares. Fair enough. You could buy 130, and you might be able to buy 1,300, and soon you might be able to, scale up a little bit more. So, you can take the same trades with different share size. It's really proof of concept. If you can be consistently profitable with 100 shares, then the only difference between 100, and 100 a day and 1,000 a day is increasing your share size, moving the share size up. So you want to do that slowly. And I want to remind everyone here, again, as I say so often, do not trade with real money until you have proven you can be profitable in a simulator. If you don't have a simulator that you can trade in because you're trading on a Mac or your broker doesn't offer it, it may be okay to trade with 100 shares based on your risk tolerance. You may say, okay, well, it's better for me to have skin in the game and start to deal with some of the emotions. So I'm going to go ahead and trade with 100 share max size. And maybe my starter position is 25 shares. So if you do that, you've got skin in the game, you're trading with real money, but I mean, realistically, you shouldn't, if you lose even $100 a day, you're giving back quite a bit. So you shouldn't be losing too much. A full dollar per share would be $100 of loss, and that would be a pretty substantial loss. So, that could be an option. But generally, you don't want to size up to trade big until you know what you're doing. So IO, pre-market high right here, 347. First trade, right out of the gates, long for the break of the pre-market high, and this thing ripped out of the gates. I mean, it doesn't get much better than that. 340 up to 420, and then this was the pullback right here. That dip down to the VWAP. I was already green when I took that trade, and then we got this nice breakout here. Now we did get a strong flush right here, a big drop, and I bought that dip. But it didn't really pop up that well, and that ended up being probably an $800 loss. So I was a little disappointed that didn't work, and from there, this just ended up going lower. So it was kind of interesting because I had some really good trades on it, but the dip trades didn't work out once it broke below VWAP. Next trade was Pixie. Now Pixie, I wasn't watching very closely, but it broke the VWAP right here. Big squeeze up, and then we got a couple of pullback trades. One right here, as you can see, which I took. And then I tried to take this bounce down here. I was long at 780. And on this one, I got a starter of 2,300 shares or something like that. And as it started to go lower, I didn't get that dip bounce that I wanted. So I was like, all right, I'll just hold this for a second. I've got a small position. And next thing I know, I was down 15 cents. And then I was down 20 cents. And then I was down 30 cents. And I was like, all right, well, now I'm down $600. And the reason I was holding was because I was waiting for that flush, that panic, to catch the pop coming back up. But we just didn't really get it. It just kept grinding lower. And so finally we got a little flush down here to 7. And so I was like, okay, that was a flush to 7. So I took the bounce off of 7 and added, but it didn't pop up. And so finally I cut the loss down $2,500. And so I reviewed that one while I was trading, and it's in the live trading archives, of kind of asking myself, where did I go wrong on that trade? Was I too early? Should I have not been trying to do a dip below the VWAP? Was it the volume was too light? Because the volume is a little lighter on this stock. And I kind of concluded a couple of things. Number one, the volume being lighter was definitely a problem, because it was harder to get in and harder to get out. And for dip trades, I really want it to be very liquid, like with IO, where I can just punch in and punch out. So lighter volume and bigger spreads. Girl, I need you to go lay down. Go on, go lay down. Lighter volume and bigger spreads, a little bit of a problem. Trading below the VWAP is always risky, and in this case, lighter volume and bigger spreads below the VWAP, double, triple risk. So I think that I should be careful on that type of setup. Now, on the dip on IO, where it did this panic drop, and that was back here, again, this was a panic drop, no doubt about it. It hit a low of 53 and bounced back up to 71, which, is a 20-cent bounce off the low, but I still was expecting a little bit more than that. And I took my first entry on this similarly around the VWAP, then cut the loss down 8 cents. And then I can't remember if I got back in it. Let me just look here at those last trades. So that last trade, okay, so I was in at 84. I cut it at 71. But my starter at 84 was a small size. I then got back in at 52 and sold it at 63. And then I got back in at 45 and sold it at 50. So I had one red trade and then 2 more small bounces that made up for most of that loss, I guess, probably. And then I switched gears to TTPH. So, just not the cleanest bounce, but we had this one when it was still above VWAP was much better. So above or below VWAP, maybe a little bit of a little something there. And then TTPH, I had a nice trade on this right here once it broke VWAP for the break of 3. False breakout, bought the dip, rips back up, and I did really well. Then right here, it flushes down to 3. It drops and actually on this one, so this one I bought at, on this pullback, I bought at 36 and then added at 20 as it was dropping, and it popped back up here, but then it came lower and I stopped out of this one for a loss as well. So I don't know. I mean, I think that just like breakout trades, sometimes you'll have false breakouts. So just like dip trades, sometimes you'll have dips that don't pop up as much as you think, and they keep going lower. My accuracy seems to be higher on the dip trades right now, although today was maybe a little bit less. But I think that on the one hand, I want to really analyze them so I can get better at those trades because they're a little bit new to me. But on the other hand, I don't want to get bent out of shape if I have a couple losses because, I'll have a loss trading a breakout, and it's no big deal because I just know with breakout trades that I'll be right 65 to 75% of the time, given varying months and weeks. And so it's okay to be wrong on 25 out of 100 trades. It's not really wrong. It's just the strategy allocates for those losses. And that may be the same with dip trades. And it is a little risky in the sense that buying a weak stock, expecting a bounce, you're trading against the trend. But you can get a nice risk-reward ratio if you get in at a good spot. So maybe today I just wasn't as dialed in on these two. Or actually the three for bounces, and the breakouts were a little stronger. But, still, again, trying to continue to improve that and tighten up the risk as much as I can. And so today, I think my biggest concern is that my accuracy is probably still pretty solid. I mostly had winners today, and I had a good number of them. But two bigger losers on two dips that failed, one on Pixie and one on TTPH, and even a smaller one on IO, it might not help the average losing trade. So this will be kind of interesting because coming out of March, I didn't have a very good month in March. I wasn't really happy with my performance. And so in April, I made the decision to trade the first 2 weeks, 3 weeks with very small share, very small for me, 6,000 share max size. I didn't start increasing that until this week here, where I took a few trades with bigger size, and then I kept, again, a few trades here and there with 8,000, 10,000 shares. And now, as I'm feeling confident, it feels like it would be a disservice, like on these trades today, to do it only with 6,000 shares. Since I seem to be managing my risk pretty well and trading these generally very well. I definitely think that there's a cap to share size where at a certain point you start having decreased profitability due to slippage. But I've also been focusing more this month on stocks with higher volume, which is a little bit, it makes it a little bit easier to trade with bigger share size. Let's click on instrument. So this is my profit by the stock's volume, and I've made the majority on stocks over 25 million. So, 25 million means I can afford bigger share size. My biggest loss in the last 30 days or so has been on NBR, 2,700. So I'm not going to top that today, which is good. But yeah, some interesting stuff. And the thing with trading is that you constantly have to be in touch with the market and your metrics and what's working and what's not working. Because sometimes, you'll find that, okay, breakouts right now are not working as well. This might be a time where I do some more ABCD patterns, or I do some more VWAP trades or pullback trades or dip trades. Or you might have a period where you're like, wow, these trades are working really, really well. I think it might be time for me to up my share size a little bit. But as soon as I have a day where something goes wrong, I have to ease off pretty quickly. And so one of the goals for me has been to try to continue to be green, as much as possible. If I can start the day green and stay green, that's great. If I start the day red, which I did on this day, I had a small green trade, then a red trade. then it's very important for me to try to get myself back to green. And, yesterday was straight in the green. Today was straight in the green. So that first trade really has to count. And if I get a cushion on the first trade, then that's when I'm like, okay, I've got a cushion. Now I can increase my share size. And so that's what I did today. I said, all right, I've got a cushion on IO after my first trade, because it was an awesome trade on that squeeze up to $4. So I said, all right, on the next trade, I'm increasing my share size. I'm going to, things are working. I'm going to put on a little bit of heat. Now, if I had gone red on that first trade, it would have been with small size, which means it would have been easier to dig myself out of the hole. And I probably still would have had a good chance of finishing the day green. The biggest risk right now would be if right out of the gates, I jumped into something with full size and got like a 50-cent loss, a huge loss. If I go red 2,500 or 3,000, I don't know that I'd be able to get myself out of that hole. Because even though you might say, well, Ross, you're up 11,000 today. You certainly could have gotten yourself out of the hole. The only reason I'm up 11,000 is because once I was green, I felt comfortable taking bigger share size. So if I go red right away, I'm not going to feel comfortable taking bigger share size. So I'm going to have to start digging myself out with small share size to make sure I don't make the hole deeper. So those are days where, at best, break even would be probably what I'd be looking at. So let's see. This was IO. Right. I had something else I was going to show you. MGNX. So MGNX today, this one I did not trade. And I thought about it yesterday. It made this really big move yesterday. And my feeling was, I didn't really miss anything. Yes, obviously the stock went from $10 to $30. But by the time I saw it here, by the end of my first hour of trading, I'd already missed the move. It was already pulling back. The spreads were big. And I looked at it and I was like, I can't afford the risk. Now, as it broke out right here, nice breakout, but this was at 11:30. I was in a Warrior Pro Mentor session, and I wasn't going to trade during that session. So I just said, no, it's too risky. Then I went to lunch, didn't trade this, and of course, then it's the afternoon. So I didn't really miss anything. If a stock doesn't present a low-risk opportunity, or if a stock is well outside your risk tolerance due to the price or the float, you're not missing anything by not trading it. You're not missing it because you would have been breaking your rules to trade it. So this morning when I saw it, I just sort of felt like, although on the one hand, I could see how this might pop up, I feel like there's two problems. Number one, I don't think it's going to have enough volume. It's too expensive. I don't think a lot of people are going to want to buy it. I think that the only people buying it are probably people who have FOMO from missing the move yesterday. And those are people that might take poor quality entries or market order in and out of it, and then it's going to end up being really choppy. And that's exactly what it was. It was choppy. From 23 to 24, down to 21, back to 24, back to 21, back to 22. That's choppy stuff. But that's the type of stock that if I had traded it right out of the gates, just like that, I could have lost 5,000 or 6,000. I know it. Just like that. Those are the stocks, when I look back at some of my bigger red days in recent months before I sort of tightened things up in May or in April, the end of March, let's see, VVUS, SGBX. So let me just look at SGBX. Actually, that was not a higher price one. VVUS, let's look at that one. Actually, neither of those were super high priced. I was just being really aggressive on my share size. But in any case, I've found that sometimes when I start trading these higher priced stocks, that's when I get the big $10,000, $15,000 loser, and I just can't handle that right now. I don't want that. So I'm going to keep the green streak going since my last red day now. Let's see, I had gross profit of $117,000. Now it's going to be $128,000, almost $129,000. So close to $130,000 since my last red day, with profit loss ratio of minus 271 to the loser, 400 to the winner, 75% accuracy, short trades, break-even trades. I get in and out fast, and the biggest gain has been $13,000. Biggest loser, $2,700. So Tomorrow I'm going to try to make it day 27 and finish up the week with a green day on Friday. That would be a great way to finish the week, just to not push it too much. This, no doubt, has been an awesome week. I'm not sure the best week. Let's see. So this week I'm up, 11 today, or almost 12 today. Let's call it 12 plus 8. So that's 20,000. That's 26. That's 27,300. So 27,300 bucks. That's not bad. But let's see. Last week I did 9,000 on Friday, and then let's just go back to the calendar. 9,000 plus 8. Well, so that's 17. Ooh, wow, look at that. So that's 23, 24, 28,000. Holy cow. So last week I made like 33,000 bucks. That's crazy. So last week was a better week. But you know, I can tell you that it's easy to get spoiled on numbers like these, but there will be a time where the market will slow down and these big gains will have to tide me over, and I'll have to be really patient and not force trades. Be patient to wait for those good setups, and it will be a test of my patience after having such a nice hot streak here. But we're not there yet, so I'm just going to keep trying to ride the momentum and be grateful for these green days and try to have a 27th consecutive green day tomorrow. So $11,921.83. What a day. All right, so I'm going to switch gears here. We're going to do a Warrior Pro Mentor session until noontime, so I'm going to jump over to that. And to answer your question on my accuracy on the dip trades, I actually think the accuracy is higher because during the first 3 days of May, I was primarily taking dip trades. Some of those days I was only taking dip trades, and my accuracy is 80%. So right now my accuracy looks better. However, my average winners are a little smaller and my average losers are a little bigger because those dip trades, sometimes when they don't work, the loss is a little larger. So that's one of those things that you sacrifice sometimes. Higher accuracy. I mean, it's not hard to predict when a stock is going to go up 5 or 10 cents. So if you really do take your profit when it's up only 5 cents, then your average winners are going to be small, but your accuracy will be pretty high. And of course, when you have a loser and you lose 10 cents or 12 cents, even though that might only happen 20% or 10% of the time, because the loss is bigger, you'll have a negative profit-loss ratio. So it's kind of the way it goes, and I'm usually okay with that because I feel better having high consistency, high accuracy. It makes me feel more confident, even if the winners are small, that trade after trade after trade is green. So, all right, that's it for me. Hope you guys have a great day. Warrior Pro students, we're gonna switch over to the Warrior Pro room and do Q&A. Hey, have you seen my most popular video on YouTube? It's got over 5 million views. You can check it out right here, and check out one of my other videos on YouTube right here. I hope you guys enjoy, and as always, if you have questions, leave them down below in the comments section. I personally respond to every comment that's posted.